Hello, everyone. Welcome to Wall Street from Main Street podcast. My name is Mo Dawood, and today's guest is a returning guest, Fabian Calvo. Fabian is one of the leading entrepreneurs and real estate investing experts in the world. He has closed thousands of real estate transactions and tens of millions in purchases and sales in 30 markets in the United States. He is also the founder of Fabian for Liberty. Fabian, welcome back.
Hey, Mo. Thanks for having me back on.
All right, Fabian, I want to start off by talking about what happened in the gold market. Couple of days ago, yesterday, we had somewhat of a crash in the gold market, which is something that we've been seeing for the past couple of years. But now gold has made the 5-year low as of yesterday. Are you surprised about what happened, and why do you think that happened? There's a lot of theories out there by various experts on why that happened.
Well, I mean, I know why it happened. Basically, like every other financial market out there, be it stocks, real estate, bonds, commodities are heavily manipulated. The London Telegraph came out with an article just, I want to say 6 months ago that was talking about how the world's wealthiest, including also central banks, were buying gold, quote unquote, Italian job style. And so with any market, I mean, I think what's being done is the price is being manipulated downwards so that the 1% of 1% can continue to stockpile gold. I mean, to me, it's pretty obvious. No, that's what's happening. I mean, of course, mainstream media will or other economic pundits out there will try to tell you that it's because the dollar is strengthening. And, if you just look at the debt of the U.S. alone, unfunded liabilities, everything else, it's a complete horror show. And so, I think it's just more so like an article came out in Bloomberg a couple weeks ago about the wealthy buying farmland, which is technically another type of commodity. So yeah, I think that, they've manipulated the price of gold down. And it's like the real estate, it really mirrors almost a real estate market. If you think about it, Mo, like, in 2004 to 2008, we had a run up in prices. It's like the shoe shine boy starts buying real estate at around January of 2008. The market crashes middle of the year. Prices plummet. Then the hedge funds and the big banks and everyone else comes in and starts buying properties pennies on the dollar. Well, in essence, that's what they've done with the gold market. They manipulated it up to almost $2,000 an ounce. They've crashed it now. All those people that bought at 2,000 are panic selling, and it's a repeat, really.
And yet, and also, if you remember last week, China released their gold reserve numbers, and no surprise, it was lower than what I think most gold experts were expecting. They said that they had about 1,600 tons of gold in their vault, which is only about a 60% increase from what they had in 2009, which was about 1,054 tons. But obviously, I think they have a lot more in the vault. They're just trying to keep their gold prices down so they can continue to accumulate and perhaps move their way up and maybe becoming one of the world reserve currencies.
Yeah, Mo, it's so funny that you bring that up because I actually think that they're completely lying. As the Chinese do lie about their economic growth and basically most of their publicly traded companies, the accounting and everything else is totally fraudulent. But I think they're absolutely lying about gold reserves, and I'll tell you why. I mean, just the other day I was reading this book. A friend of mine sent me a passage from it, and I think it's called The Way of the Warrior, something along the lines. But it's like a Taoist philosophy. And in essence, what it talks about is, if you're really good at something or if you have a real strength, you're not flamboyant about it. You don't go around flashing it around. Instead, you basically almost hide it. You kind of have this invisibility. And now, if you have to stick up for yourself or if you have to put your cards on the table, you do ultimately. And I think that's what the Chinese are doing. Look, the Chinese are openly advertising their currency as the world reserve currency in other economies, other Asian economies around the world on billboards. Not only that, they are the BRIC nations or the Asian Infrastructure Bank, the Shanghai Organization Council or Organization Corporation, all these different organizations that are being formed, I think as they continue to emerge as the global superpower, and certainly they want that title with respect to the world reserve currency. And so I think they're just, very silently behind the scenes accumulating gold major, and I think they basically lied about what their holdings were.
There's also speculation out there that the Federal Reserve might start raising the rates, and that caused a sell-off in gold as well. I mean, I don't think that's going to happen. I mean, for various reasons. I don't think they can raise the rate. Because any increase in interest rate is more interest payment for the government to pay on their debt, which has continued to blow up.
Yeah, I mean, the last, if you even want to call it this, but the last tool in the toolkit for the Federal Reserve, they've run out of all options. Most of the options, or most of the tools that they've implemented, unlimited stimulus to quantitative easing, are unprecedented at the level that has been done by the Fed, specifically since 2008. So I think that the last thing they have left is what Alan Greenspan referred to as the wealth effect. And that's basically keeping interest rates at record lows, trying to inflate asset bubbles across the board so people feel wealthy so they go out and spend money. If they increase rates, that's going to drive that down substantially. So they're, in my opinion, look, for the last year, maybe two, we've been hearing that, rates will be raised. Rates are never raised. And I don't think rates will be raised until there is an economic shock and this current business cycle comes to an end and the start of the new one begins.
And yep, I definitely agree with you there. So it'll be interesting to see what happens in the gold market. I feel bad for the gold miners because I read somewhere that from that crash, the gold mining industry lost about $6 to $8 billion worth of market value, which tells you how sensitive they are to the price of gold, and right now they're really struggling to stay afloat.
You know what, Mo? I haven't personally researched this, but I guarantee you, at least I would not be surprised if you started to hear in the next few months about large hedge funds, billionaires, the 1% of the 1% beginning to buy up gold mining companies. That's another form of, just like they manipulate the gold price downward, they also try to crash whole industries where they could swoop in and buy them pennies on the dollar. So I would not be surprised if we hear that in the coming months at all.
Oh yeah, I mean China definitely started to buy gold mining companies in other countries. So yeah, I definitely agree with you there. So let's shift gears here and talk about other current events that's going on in the economy. And one that's very popular right now on mainstream is what's going on in Greece, mainly because they might be the first countries to leave the euro. Right now, to me, they're in a no-win situation because they have so much debt. And yet, the EU is giving them debt relief, but to me, it's just kicking the can down the road to the inevitable, which they're just going to have to default, because I don't see any way for them to recover from this, because the country is poor and the economy is struggling. There's no way they can pay the debt. So I want to get your thoughts on what's going on in Greece.
Yeah, so I mean, Greece has basically just received the third bailout, and I believe it's been in the last 5 years, and it's in my opinion, that's the definition of insanity, because they continue to get these bailouts thinking that it's going to somehow turn around their economy. And what I think is most interesting is that Greece really accounts for about 2% of the GDP of the European Union, less than 2% of the European Union's population overall. And look at the shock waves that it's basically sent through financial markets. And I think most economic pundits would say that they successfully have solved this problem, and that, Germany capitulated and that Greece somehow won this. When really, it's just kicking the can down the road. I think the big question is what happens when you potentially have, some of these other nations who kind of have been on the back burner, but whose debt problems are equally as bad, whether it be Italy, Portugal, Spain, all of them, Ireland, all of them have massive debt loads as well. Even the French have, even though they still have a AAA credit rating, they have debt problems as well. And the model overall is totally unsustainable. And so I think that, it's just really, like I said, a question of time here, Mo, how much more time. Now, what I find interesting is that I was talking about how I think that if Greece did leave the euro, it was because of the fact that they had a plan in the works with the Chinese and the Russians. And, I read today on Zero Hedge via the Greek media, some Greek media outlet, talking about how Cyprus had reached out to Putin for a $10 billion loan in order to reprint the drachma. Apparently Putin denied it. And, so he took basically Germany's proposal. But I think overall, this is, it's very interesting. I think that these countries, I think Putin and the Russians are looking to pick off these countries little by little, especially ones like Greece who have strategic naval bases along the Mediterranean. In other words, and I just find this whole economics and geopolitics so wrapped up together that it's one of the reasons I often talk about this idea of the global economic reset, which basically includes all these different things that are about to be reset, whether it's borders, governments, the EU, all these things that we're living definitely in this historic time.
It'll be interesting to see what happened in Greece. There's also reports out there. I was reading Jurhead today as well, and the city is predicting a hyperinflation that could break out in Greece pretty soon. Do you agree with that?
Well, for me, my definition of hyperinflation is a loss of confidence in the currency. I don't think the Greeks have necessarily lost a confidence in the euro. They may have lost a confidence in the overall debt, in this bailout process, and knowing that really it's not going to work long term. I think that I think the most important takeaway for me about this Greek situation is the fact that it's almost like a playbook of what is going to eventually happen in the United States when it comes to the bank holidays, when it comes to the intense capital controls, when it comes to people beginning to panic and stockpile food and gas and what have you, when it comes to more of the fringe political parties using the economic downfall as a potential to, in essence, obtain more influence over the government and over just the politics of the country. I think all of those things are coming to America. Obviously I don't know when, but that's what I find interesting about Greece. Also, the bail-in that was being reported, where basically anybody with 8,000 euros in their bank account were going to get a 30% haircut, and the bank was going to use it to recapitalize the banks, something similar like they did in Cyprus. So that's where I find these things interesting, because the same people that are solving, or at least on paper trying to solve those problems, which they're not, they're just making them worse, are the same ones that are going to be trying to fix America's economic woes when when those problems come here.
And what's interesting is there's other countries in the Eurozone that has the same problem as Greece. Spain, Portugal, Italy, France, they have major debt problems. So their days are coming as well.
No doubt about the fact that their days are. France is lucky, at least, like the Japanese, in the sense that they have actually still industries that they're able to, in manufacturing and things of that nature. But you look at like Ireland, Spain, or Italy, you can't even compare that. So yeah, those countries are next on the list, and the EU, I think, will go down as a historic failure. And the answer to it is more centralization. In fact, just the other day, the French president was calling for having a new EU government, almost like this, not a global government, but an EU government. And their response, Mo, to their economic problems of just complete debt insanity isn't let's go back to more sovereignty for the states. It's let's have less sovereignty and pass the problems upwards to a more centralized type of government, which when you think about it, those centralized government and those central planning ideas, it's what's led to these crises that we're seeing happen throughout Europe right now.
Yeah, well, the big difference between Greece and the U.S. is the U.S. can print money as much as they want. Greece does not have that.
No, but Greece has and I've heard this a lot. Greece has the ECB, and the European Central Bank can print money, and it has been printing money. I mean, they're the ones who were keeping. At one point, Greece had about $55 million. Their banking system had about $55 million left in reserves. I think it was something like $50 per every Greek citizen in the country. So the ECB was giving them emergency cash. So, the ECB can print money. Now, do they do it to the scale of the Federal Reserve? No, they don't. But they do have that. Now, you're right. Greece by itself cannot print money, but they do have the ECB. But you're right. The Federal Reserve obviously is what's keeping America in business. In fact, this Friday, I'm doing a webinar about the monetary system in America, and we've been working on this webinar for a couple of weeks now. And Mo, it's like, I've shown it to some friends who, are bright and well educated, And they're absolutely shocked when they find out the way the monetary system in this country works. In fact, many of them, they don't even believe it. I mean, I had to tell them, look, go do your own research and figure it out for yourself. But this is all true. This is how it's working. And I think when most people find out how the Federal Reserve has, in essence, hijacked our once free market capitalist system, they can't believe it almost. It's like this, it's like this kind of shock that they go through.
So your circle of friends, are they? I guess are they not libertarian? They're just. What kind of friends do you have in your circle? Are they libertarians, or they're conservative, or the liberals?
Yeah, they're really across the board. I have hardcore progressive, quasi-socialist, friends to people that are libertarians, and I like to associate with all people, and I make friends with all people because it's just how I learn more. And sometimes they have good ideas that I'm not, certainly my ideas aren't always right. Now I'm I'm an unapologetic libertarian. I think that those are philosophies that most Americans actually agree with. In fact, there's a test out there, I always forget the name, and the results are 70% of the time most people come out to be a libertarian. And they don't even, unfortunately, most people in America don't even know what a libertarian is.
They associate it with corporatism a lot of times.
Yeah, they do. And it's just, it's sad that, but it doesn't surprise me, Mo. I mean, look, the establishment wants a two-party system. That's how they maintain power. They want a two-party system, a two-party system that in essence plays by the same, plays by the same rule book. The only difference between the Clintons and the Bushes, if you think about it, are really just their rhetoric. Their policies are pretty much exactly the same.
Yeah. Oh, I agree. The two-headed monster.
The two-headed monster, exactly right.
I mean, they're conservative. There's even libertarians that don't know exactly how the Federal Reserve works and how they print money and how they destroy our own currency. So that the concept is very foreign to most people. And there's a lot of information on YouTube, like your information. Mike Maloney has a nice video people can watch that shows people how the Federal Reserve create money out of thin air. So I definitely recommend people to check that out and educate themselves on that, because that's very important. So I want to talk about what's going on in China as well. The past few months, China's stock market has completely crashed with losses in the double digit, the biggest crash and for quite some time. I just want to get your thoughts on that, and as to why do you think that's happening? Do you think that this is the China bubble that everybody was talking about and it's finally blowing up, or did the China economy taking a cool-off period, so to speak?
Well, I think anyone who is thinking, or anyone who wants to understand how China's works, they got to understand that China, when we talk about central planning, China is really the model for state-run capitalism. It's completely centrally planned. 60% plus of Chinese companies are owned by the government. And what they're trying to do is they've tried to create the hundreds of millions of people that they want to make them consumers. They want to make them buy into financial services. And so that's what you had. You had a lot of people buying stocks. And over the last year, the stock market in China went up, I believe, over 150% or close to 150%. And, in June and July, it tanked by 30% plus. So, that's going to happen. But make no mistake, China will enter a Great Depression the way that the United States entered a Great Depression in 1929. And that's part of a healthy economy. I'm not saying China's economy is healthy because, again, there's no free market capitalism whatsoever in that country. So it's more like a manipulation that's led to this crash. But yeah, of course, you can't, things don't last forever. That's something we've all heard, and it's true. And their economy is going to eventually crash and be, like I said, like a Great Depression. But their problems, Mo, I mean, look, the media's been talking about this a lot. Their problems pale in comparison to the level of debt that the United States has, not to mention the derivative bubble that is pretty much owned by Wall Street banks. I mean, you can't even compare the two. So when I look and I forecast and I think about long-term where this thing is headed, I say to myself, well, what country has the worst economic problem? What country has 50% of the population dependent on government for its livelihood? And that's basically the United States.
And the Chinese central bank put out all the stops to try to stop the bleeding in the stock market. At first, they cut interest rate and bank reserve requirements. That didn't work. Then they intensified margin lending, and that did not work at all. And then they tried to just suspend training and outlaw selling. I mean, they really tried everything they could to stop the bleeding.
Yeah, I mean, they really did. And look, what happened is that people panicked, and they basically didn't allow major firms to sell stocks. And much of this run up was due, I think, to this experiment of having the middle class Chinese, if you want to call them that, basically starting to buy and accumulate stocks, and they were the ones who sold. And for many of them, it's really a new experience in the stock market, or for that matter, any type of financial asset. So, they've panicked, they've lost money, and they sold, and I think that's pretty normal.
Yeah, and I have sources in China, and they tell me that the Main Street in China do not put large amount of their investment into the stock market. I mean, they view the stock market as like a casino, so they have play money, and they use it on the stock market in China, and because most of them in China and on Main Street have their money in cash, gold, or the house that they bought. That's pretty much it.
Yeah, let me just say, I think what's the most important thing regarding the difference also between China and the United States. In the United States, if you're a high-level banker, let's say John Corzine, or a hedge fund operator, and you steal $1 billion plus from your customers, you get to become a major bundler for the Obama campaign. You get to testify before Congress with a little plaque in front of your name that says the Honorable John Corzine. In China, if you commit financial fraud and you're a banker, they kill you, Mo. That's the difference. Now, if trust, at least in my opinion, trust is the underlying bedrock of any economy. If people don't trust in the economy, there really isn't really a market. So if I look at the U.S. economy versus the Chinese economy, I got to tell you, at this moment in time, I have more trust in the Chinese economy because fraudulent bankers get executed. Here in America, that doesn't happen.
Oh yeah, that's why I wish Wall Street could just move to China. So if they do anything wrong, they're dead.
Right, exactly.
And what's disturbing is I just read a couple of articles that the CEO of Goldman Sachs is not a billionaire now. And all these people on Facebook were posting him congratulations, or I wish I was him. And I'm the only one that went on Facebook and posted, well, this guy, if it wasn't for the Federal Reserve, this guy would probably be in jail or out in the street, because without that bailout money, he would never be a billionaire.
Yeah, no, Mo, I just finished reading this great book by Stockman, and a guy who worked for the Reagan administration, and it's called The Great Deformation, and it goes into a piercing critique of Goldman Sachs and basically the whole bailout culture, but how Goldman Sachs really was instrumental in causing the panic and this kind of like marketed response to people freaking out and people basically saying, hey, if we don't bail out the too big to fails, the economy is going to crash. It was all lies. Goldman Sachs was instrumental in all of that, and they reaped hundreds of billions of dollars in the process. So yeah, the guy should be in prison, for the love of Pete.
Yeah, and then Warren Buffett was the major player in trying to get the bailout package for Goldman Sachs and Bank of America and all these investments that he had in the major banks.
Yeah, I mean, Warren Buffett also ran the rating agency that was stamping debt, phony junk debt, AAA, and selling it off to the Chinese and, to Germany and to, around the world. So.
Yeah, I mean, he's a great investor, but he's a crony capitalist. I mean, it's odd because his dad is, he believes in the gold standard and buying gold, and yet Warren Buffett is the complete opposite.
Yeah, Warren Buffett, for the record, in my opinion at least, Warren Buffett was a great trader early on. He's made a majority of his money through crony capitalism and through government deals and state-run deals that are totally crooked. Just like the Goldman Sachs CEO, I would label both of those guys, Mo, financial terrorists. They're no different than the guy in Afghanistan putting on the suicide vest to go blow himself up, except it's not, necessarily killing people, but it is a form of terrorism. In this case, it's financial terrorism.
Wow, that's a great insight. I agree with you. I mean, Warren Buffett has done a lot of business with the government in order to increase his wealth, just like any other bankers on Wall Street.
Yeah, I
So
mean,
it's
look,
unfortunate. It's unfortunate people like love him and admire him so much when there's a dark side of him that people don't know.
Yeah, I mean, listen, if I put a strap-on suicide vest and I go into the local bazaar and I blow myself up and take out, however many people, what's the difference between that and me blowing up the U.S. financial market in 2008 like, Lloyd Blankfein did? I mean, it's really the same thing. Again, people aren't necessarily dying, but, a lot of people probably did die jumping out of windows and, committing suicide because they lost everything in 2008. So it's just a kind of a different thing, but it's still pretty much the same, and at least in my opinion it is.
Well, yeah, I agree. Nothing has changed from 2008. I mean, Wall Street's still speculating. And, I mean, the trading department is bigger than any other department or division they have in the company because that's where they make the quick bucks. And that's where they do all the manipulation as well, unfortunately.
Right.
So one last topic before I let you go. I want to talk about the real estate market, which of course, your expertise, and I want to get your insight on what's going on in that. I was just reading an article the other day on the hottest market for the month of June. And to no surprise, the majority of it is in California and Texas, where the economy is strong, and California is, where all the wealth is located and in its country. Do you see another bubble being birthed in California, or do you see that coming in Texas as well because of the oil prices collapse?
Well, I mean, look, in California, you've had double-digit price increases going on now for the last couple of years. So overall, what doesn't get the press, places like California, or even for that matter, New York, get more of the press when it comes to housing because of the astronomical prices that some of these properties are selling for. But I'll tell you, in markets that aren't often talked about, whether it's Atlanta, St. Louis, even Detroit, you've had property appreciation go up 50 to 100% over the last 3 or 4 years. Now, that might be a property that was worth $20,000 that's now worth $50,000, just for the record. But nonetheless, you're seeing markets overheated everywhere. And, Mo, it's being fueled still by private equity hedge funds that are buying. They've slowed a little bit. But they continue to buy. I was reading about a company the other day, I forgot their name. They're buying $25 million worth of homes a week. You certainly have Europeans and Chinese that are buying even more out of fear of what's going on in their countries. And then you have FHA home buyers that are now able to obtain financing, basically like if you could fog up a mirror, you could get an FHA loan, basically. And that part of it has just started. So look, like I said at the beginning of the interview, all financial markets are manipulated now. And I think the real estate market, Mo, it took a while for the banksters to really figure out how we could manipulate the real estate market. And I think it's pretty relatively new, like the last 15 years or so, we've seen this manipulation take place, but they've gotten really, really good at it. My forecast for the real estate market is still the same as it was in 2011. When I said that we'd go back to 2007 pricing, people thought I was crazy. We're at the doorstep of that now. I see price appreciation in real estate continuing to go up 10% across the board, at least for the next year, and with the very good potential of it going absolutely crazy 2016 to end of 2016 until we have another huge crash and leg down in valuations.
So for someone that wants to get into real estate right now, would you recommend them to sit on the sideline and wait a little bit, or do you have any other suggestions for them? Because you think that obviously the price is rising and it's becoming overvalued, so it wouldn't be a good idea to jump in now.
Well, I mean, look, the type of for the record, the type of real estate investing that I do is I don't fix and flip. I don't rent properties out. I do have a few rentals in apartment buildings, but that's not my strategy. My strategy is to basically buy distressed real estate. This is what I teach as well to students, is buy distressed real estate from hedge funds, from Fannie Mae, from some banks, from private equities, from servicing companies, and resell them in a relatively short order to local cash investors that have a real good knowledge of the market, and they're the ones who are going to fix and flip and rent it out. Now, they might be right, Mo, and I could be wrong. The market could keep going up for 10 years, and those fix and flippers could do really well. It's really none of my business, It's just, it's a market like any other market. If I buy jeans wholesale and I sell them retail, that's just another business model. So that's the type of investing that I do. So I would by no means tell people, look, it's a great time to buy a home as a rental, or it's a great time to buy something and fix it up and try to flip it. I know I have a lot of friends that are doing that successfully. I don't see that as a long-term business model. I do see what I'm doing as a long-term business model, because that's going to happen because there's still a tremendous amount of inventory priced under $200,000 in about 30 to 40 different markets across the country. And so with that said, I think that what I do now, the type of investing that I do is great now. It'll be even better. You know, you mentioned Mike Maloney earlier. He talks about one of the greatest buying opportunities of all time is going to happen when this crash takes place. So for me, it's like, you know, I take people through this process, you know, and I think that, and it's working out for many of them, but when the market crashes, the opportunity will be even bigger.
And for people out there that are struggling to advance their careers or try to make money because the economy is so distressed, what advice or tip do you have for them if they want to become entrepreneurs or they just can't find a job? Because especially for people that are coming out of college, they're having a hard time finding a high-quality job.
Well, listen, Mo, I mean, this is something I've talked about often, the golden age of business. You know, we spent the last 30 minutes talking about some stuff that, you know, aren't really that are, I think you would agree, are completely accurate and truthful when it comes to the dire situation of the global economy. It is a dire picture. I couldn't ever sit here and paint a rosy picture. Where I can't paint a rosy picture is that we are in the golden age of business. And what I mean by that is never, ever before has there been the ability to start a business with very little money, be able to do that online, whether you sell things on Amazon, whether you sell information, even whether, Mo, you have a podcast like yours and you're able to reach tens of thousands of people around the world. I mean, that's, you know, small cable channels would love to get those types of numbers. So yeah, I think, you know, we have this great opportunity, and I think people, you know, I heard this guy say this about a week ago, and I think this is the advice that I would give people. And, you know, what this guy was telling me is that, you know, you change your story, you change your life. And a lot of people out there are struggling, like you just said, with whether it's the economy, whether it's finding a job, whether it's they got out of college and the only job offer is McDonald's or Starbucks. And I think, you know, you got to change your story. You got to change your story about what you want in life and how you're going to go about doing it. You know, entrepreneurship is really what America is all about. America was built on entrepreneurs. I often have people say, well, Fabian, you mislead people because not everybody's cut out to be an entrepreneur. Well, guess what? You know, in the 1800s, 1900s, you know, there was the blacksmith, there was the farmer, you know, there was the butcher, they were all entrepreneurs. They all had their own businesses. There wasn't corporate America back then. And so I think that's what, you know, America's all about. And I think if people go back to that, you know, the world would be a better place, and certainly their lives would be a lot better.
And yeah, there's a lot of people struggling out there trying to make it in this economy, but yet there's a lot of people that succeed in this economy. Look at the people that created Uber and Lyft and all these other online companies, and they're famous today.
Yeah, Mo, make no mistake, Mo, and I'm speaking to your audience, that the biggest risk someone can take right now is having a 9-to-5 job, making minimum wage or a little bit over minimum wage. The likelihood is that you will lose your job over the next 3 to 4 years. 50%, according to MIT, 50% of those jobs will be replaced by robots, applications, all kinds of other new, you know, globalization, automation, you name it. So the biggest risk for me is not whether I'm making the right decisions investing in real estate or whatever. The biggest risk for me is, you know, and I'm grateful in my position, I don't have a 9-to-5 job. But you know, people often, I've always heard this, you know, it's like security over risk. The security lies in me getting a weekly paycheck. Me trying to start my own business is risky. I'll take the risk of starting my own business any day over having the security of a paycheck, which is going to be the biggest risk and probably the worst decision you've made in your life long term.
That's funny because people usually have had that flipped around. They say the 9-to-5 job is safer, and then starting your own business is very risky. But I think having a 9-to-5 job is risky, and I agree with you. Also because you lose your job, and also a lot of people don't even enjoy their 9-to-5 job either, so they're miserable.
Exactly. It's exactly right.
Well, Fabian, well, thank you for your time. And if people want to find out more about your work, where can they go?
Yeah, so I mean, listen, if they want to learn more about the investing or entrepreneur stuff, they can go to resourcefulrealestateacademy.com or resourcefulentrepreneuracademy.com. And for all my videos on economics, geopolitics, fabianforliberty.com is the place to go.
Okay, great. Thank you. And I hope you can come back on again soon.
Yeah, Mo, thank you so much for having me on. Keep up the great work, and it's always a pleasure.